In normal market conditions, the US dollar and crude oil usually trade with an inverse price correlation. Now, this makes perfect sense in that the global oil trade is priced in dollars within the petrodollar system. So if the dollar trends lower, it would take more dollars to buy the same amount of crude, i.e. a higher crude price. Now, on occasion, this correlation flips and becomes positive. There are several factors that could force this change, but most commonly it would be caused by a US dollar being strengthened by domestic interest rates moving higher and/or crude prices moving higher from unrelated factors like OPEC production cuts. Not coincidentally, the positive correlation between the dollar and crude accelerated near the beginning of 2022 when the Fed was about to embark on one of the most aggressive rate hiking cycles in history. Of course, this policy pushed the dollar aggressively higher. Now, throughout the period, crude prices have remained elevated, perhaps reflecting the ongoing production restrictions that OPEC has had in place since 2018. Now, the last element in the equation is the geopolitical influence. Now, the invasion of Ukraine by Russia had the dual effect of taking oil off the market as the function of embargoes and then pushing global money into the relative safety of US dollars in a time of global stress, thus strengthening the dollar and strengthening crude.